Ladies and gentlemen, hamjambo. Hope your day was good. My name is Dr. Robert Mugo. I want us to continue with our series of Financial Literacy Simplified. Today, I want us to learn about taxation. A tax is a mandatory financial charge levied by the government to a legal person. A legal person here is either an individual, a partnership, or a company. This could be foreigners or residents. When we talk about taxation, you know the government needs money to provide services. Things like military depend on taxes. Things like road construction, airports, government social services all depend on the taxes that are levied. Tax from time immemorial has been something quite controversial. I don't want to deal with whether this tax is good or not. Remember, we started by saying it is a mandatory financial obligation. Remember, when Jesus was asked by some people, should we pay taxes? He asked, give me a coin, a denarii. Whose image is encrypted in this denarii? It was Caesar, the governor. So he said, pay Caesar what belongs to Caesar. Now, taxes most of the times are levied on two aspects. On incomes, if you earn an income, or on some expenses. You want to spend money, you will pay taxes. There are some items that we shall learn one by one through Kenya Revenue Authority that they say this is an item that can be charged a tax. So we have taxes on spending, ukitumia pesa kama VAT. If you want to consume things, you have value added tax. We have things like customs duty. You want to import a bicycle from UK. You want to import that golden jewelry from whatever. You pay customs duty. There is also excise duty. This is locally manufactured goods. If you spend or you buy, somebody is manufacturing, you are given a levy by the government called excise duty. You have heard about provision of services like M-Pesa, bank charges. They attract an excise duty. Taxes could also be on incomes. Incomes here could be incomes on an individual, incomes on a company. If you are an individual, a person like me, that is Robert, James, Rachel, you could be employed, you pay a tax on your employment. This is called employment income tax. You could also be receiving some pension, or you are contributing towards a pension scheme, and your employer is assisting here and there contributing towards the pension scheme. There is some tax that could be levied on that. You could be a business person. I do business. At the end of the day, you are supposed to pay income tax. You could be a landlord. You are supposed to pay monthly rental income. A company is also supposed to pay tax. This tax, we call it corporation tax. Taxes depend on the government policy. Remember, every July 1st, budget is read in the second Thursday of June, which is for the next financial year, which starts on July 1st. And here, the government decides we want to tax this, we want to tax this, and so on. We can also have tax aspects like what we call withholding tax. You are paid some income. Let's say I have received some dividends from Safaricom. There is a tax that comes on that. I have received some interest from the bank. I have kept my fixed deposit in the money market fund, in KCB, in cooperative bank, in equity. There is that withholding tax that I pay. Now, there is also an institution you find it has been given powers, or it has been appointed by KRA to be an agent in terms of collecting taxes for the government. We shall learn so much about this taxation. I would want you to stay tuned. We shall demystify, and I will make you understand item by item. If I don't pay this tax, when am I supposed to pay this tax? If I don't pay by the date that it's supposed to be filed, is there a penalty? How much is the penalty? The next lesson that we shall learn is about tax evasion and tax avoidance. I wish to stop at that. You can go to my YouTube, TikTok, Instagram, Facebook, X. Let's learn more about taxation. Enjoy your evening.